Hello and welcome to Commodity Champions. I'm Manisha Gupta. Well, we have seen a lot of movement come in case of commodity markets. The uncertainty in the equity markets amongst the looming recession concerns has every investor in search for a safe haven. The commodity markets have proven to be one such haven, with crude oil and gold giving much higher returns than the traditional equities in the Indian market. So is it time for you to switch your focus to the commodities market? To take this discussion forward, I am now joined by NS Ramaswamy, who's head of commodities at Ventura Securities. Anuj Gupta is VP Research at IFL Securities. I also have with me Ajay Kedia, who's director at Kedia Advisors, and Pritam Patnaik is head of commodities at Axis Securities. Gentlemen, hi, thank you so much for joining us on CNBC-TV18. Very happy festivities to you. And if you look at the last last 1 year, we have seen commodities give better return than equities. Of course, it has been a very volatile year. We've seen all-time highs and multi-year highs. And from then, there is a lot of correction. Is this the right time to start putting commodities into your portfolios? Is this the right time to start accumulating it? Is the question that I'm going to put across to all of you. And I'll start with gold and silver prices first, because when you look at the last 1 year, in the dollar terms, we may have seen a decline. But in rupee terms, euro, Japanese yen, Turkish lira, you look at all of the currencies, we have seen very strong returns come in for gold and silver both. Pritam, I'll start with you. If you were to include gold in your portfolio, what kind of returns can investors then expect?
See, Manisha, I am fairly confident that the coming year is going to be the year for the gold and silver. Primarily, there are two factors that has been governing prices. One was the interest rate hikes that's been happening continuously across all large central banks, and the other is the dollar index. Unfortunately, these are not mutually exclusive; they're actually inclusive. And the way I look at it, some of the noise has been now factored in. After the 2nd November event for the Fed, I sense that the lag effect of raising high rates is going to come and show the economic performance of all large economies. And that's going to hold back the hand of all the central banks. And then you could see softening in the interest rates hikes. And that would be the trigger for gold and silver. My sense in gold is that I won't be surprised to see levels of 55,000 to 56,000 by the end of the next year. And in the case of silver, I'm a little more bullish at about 67,000 levels.
All right, so 56,000 rupees as well in case of gold. That would be not too far away from all-time highs that the gold prices have seen. Ajay, how would you look at the gold prices? How much of a portfolio should be in case of gold, and what kind of gains are you expecting?
Very good afternoon, Manisha, and happy Diwali to everyone. Definitely, gold and silver was slightly underestimated in 2022. I would just recall 2008 also, because at that same time we have seen global financial crisis. At that time also we have seen gold and silver both were under rated, and almost for 8 to 9 months they were underperforming. But since October 2008 to April 2011, we have seen a fabulous rally in gold and silver, where gold made a high of almost 1920, which we know today also. Similar kind of momentum we are expecting since October having started already. We have seen prices has rallied from 1620 to almost 1720, and see back on the expectation that in November also there will be another rate hike. As Pritam rightly told, that already things have been absorbed in the market. And the conditions like geopolitical tension, recession fear, inflation concerns, equity market is slightly, we can say, overheated. So all these factors makes gold more attractive. Even in China and Turkey, we have already seen premiums have started moving on a higher side. So we see gold in near term, or let's say if we keep our view for next one year period. Here on domestic side, definitely physical demand and rupee weakness will add some more additional gains what we have already seen from last Diwali to till now. So we are expecting around 56,000 on domestic side, whereas in international prices can go easily can cross 1850 to 1900 level once again.
All right, so much more gains expected from here on. Pritam, if you had to choose between gold and silver, which one would that be? Because gold, yes, and if you look at the Dhanteras numbers as well, I mean, these are still early days, because I do understand that various federations and associations are still trying to get those numbers in. But the initial ones, the code that I have from IBJA says that From last year, if you compare it, it's 30% higher in sense of physical buying in case of gold. Metal Focus tells us that the silver imports into India this year are at record highs. 8,000 tons is what we are anticipating. So clearly, even as the speculative or investment buying may not have been so strong, the physical buying clearly has been pretty on the higher side. So if you had to choose between gold and silver, what side you bend slightly more at?
Bent more towards silver. Primarily being because I think it's a year of bullion, and that's also come back year for metals. And considering that silver would follow either of the two commodities, I sense and I would put my bet on silver.
Okay, and you have a very bad throat. Clearly, you've been partying a lot during this Diwali. Mr. Ramaswamy, since we are talking silver here and it is all about metals and the industrial demand is expected to pick up as we go forward, how much would you bet your money on silver? What are your expectations? What are the fundamentals you're looking at and what prices are you watching?
I would be looking out for whatever Pritam said about silver. I would be more focusing on the base metal, the the copper. Would be one which will really shine throughout the 22 year and at least for the short term. So although silver, I vouch for whatever Pritam has said, I would add on to that is the industrial metal on the copper, because the way the LME and the Shanghai inventories are dropping, and the way the ICSG is talking about the deficit of close to 325,000 tons in copper, and that sort of a number which is giving an inventory for a global consumption close to around 4.9 days, and by year end it is likely to be even 2.7 days. So looking at copper, I feel copper could be a sure short bet. With the current LME price hovering at around $7,400, $7,500 in LME, we could expect it to again go back or rally up to around close to $8,500.
All right. And Mr. Ramaswamy, would you say that among the base metal prices, among the industrial metals, the most bullish perhaps are copper fundamentals?
Absolutely copper fundamental, because the green energy transition is also expected to pick up on the demand. That is one major count for it. And although it is well supplied today, but it's all of lower grades. There is a lot of underinvestment in the projects. So if any new investment in the projects were to come up, if that is the reason it's not come up, so then there is a shortage in the, for the short term period at least, there is a shortage. So that could be the major trigger which we feel copper should again rally for the short term. Although US recession fear for 2023 and the global or the ICSG trying to talk of a surplus in copper in the year 2023 would take away the shine of 2022, and 23 could be a lackluster for copper. But yes, now for the short term, copper is still bullish.
Okay. So we're buying gold, we're buying silver, we're buying copper as well. Anuj, what is your sense between precious metals and base metals? Where are you putting your money in? And what are your targets going forward in next 3 to 6 to 12 months now?
Manisha ji, good afternoon. First of all, very warm wishes for the Happy Diwali and New Samvat. And if we check this year from starting to till date, we have saying that this year was very hawkish in terms of federal bank statement. They are continuously increasing interest rate, and all major central banks also looking towards the increased interest rate. And after that, we have seen a correction in gold, silver, and in in the other commodity also, in the base metal also. But right now we have seen that Federal Bank is now going on a lighter mode. They are expecting, and they are saying that they will increase interest rate on a slower mode. So this might be a a U-turn for the commodities. But still, we have seen some disruption in China in terms of COVID issues, and still we have seen a data from the US and even China. There is little bit not as per the remarkable. So I think for a very short-term perspective, market may be on a sideways trend. But yes, definitely, as Federal Bank is going to increase it by slower mode, and other economies also increase the interest rate, so that will be impact on the dollar, and dollar might be go down or maybe consolidated on higher levels. But still, there is a room to increase for the other international currencies like GBP and Euro. So this will impact a positive for the commodity. So my view is, if we talk for the longer term perspective, or let's say for 3 to 6 months, I'm very optimistic for gold, crude, and copper, because these are the commodity which are totally driven by the demand, and I am expecting that demand will increase whenever the economies will come out with from the slowdown, and equity market will increase, and slowly we have seen some industrial progress may be seen in the economy. So this will impact on a industrial metal side. So I'm very optimistic for gold, crude and copper. And we are expecting in next 6 months, gold may test 53,000 to 54,000, let's say in dollar terms at $1,750 per ounce. And crude definitely still there is a momentum between the US and OPEC members. US is saying that they will increase production and they will release more from their reserves. But on another side, OPEC members are saying that they will cut down the production. So that is a doldrum between US and OPEC. So I think market will moving between a range of $80 to $100. But still, the demand concern is that I am very optimistic that crude will increase from here to $100. And yes, copper is an industrial metal, so I think that is also increased. And my target on MCX would be for 6 months is 700. And on if we talk about the LME, definitely I am expecting a positive trend in the LME.
All right, so it's good going in commodities and these are good accumulating levels as well, and we are looking at some positive cues really seeping in case of commodities here. And yes, the China point is well taken because yes, the kind of leadership shuffle that we have seen in China, the zero COVID policy, a very divergent view in sense of monetary policy, all of that seems to be impacting commodities given the sense that China is a powerhouse and nearly 40 to 50% of all commodities are either produced or consumed in China. So that's going to be a wild card looking forward. But with that, we'll go for a short break. When we come back, we'll talk about energy space in detail. We'll also touch base in case of commodity markets in sense of agriculture on what are the top picks here with our experts. Welcome back, and starting that new year with a perfect portfolio is something that all investors think about. But the crude oil prices clearly have moved in such ways that it has impacted all portfolios and asset classes. And so has been the case with US dollar index, which has led to newer highs impacting markets. As of now, of course, some bit of a decline coming in for there. But crude oil is what we will stick to right now. And Ajay, what's your sense for the next 6 months? Where do you see the international markets ranging within?
Yeah, surely, because in 2022 and 2008, I was just updating that whatever the rally we have seen in 2008, similar kind of momentum we have seen in 2022 also, where Brent has almost tested $139 and came back. But looking to the current factors like winters are on about to start, and generally we see demand improves. Secondly, US is trying to continue suppress the prices of energy, but we feel it has been totally failed because right now also Brent is very well above $90. OPEC has clearly told from November onwards production cut would be there. So I think with the rise in economy or improvement in economy, we need a oil, and if we need oil, definitely oil would not be a cheaper. So I am expecting a bounce towards, let's say, around 105, 106 for Brent in near term, which will definitely impact on MCA crude, which can go up to 8,800 because rupee is also going to be slightly more weaker. So all these combination make crude a perfect pick.
Mr. Ramaswamy, what's your sense? Are you also bullish on crude and you think $100 could be breaching anytime soon?
Yeah, it should be breaching that. Basically, geopolitical on oil and gas is basically on the demand and supply imbalances. You have around 28.7 million barrel per day. The entire dependence is on the OPEC plus production. And now there is a threatening news about cutting the production by them. So that is taking the short-term news factor, which is going to actually be the turning point for the oil market. And besides that, from the G7 nations, the deadline which was given to the Russian price cap was around December 5th. And you have the EU Russian crude, which is being banned. And all these tightening of the crude supply is going to be the trigger for the short term. And probably it should, the price factor, it should hover at around close to around $100. We are expecting right from now a WTI, which I mean $84, which is currently hovering. So it could range based on these political factors. It could range between the $75 to $95. But yes, we could also touch upon this $100 in the short term.
Okay, so bullish views on crude oil prices. Actually, there was a Goldman Sachs report as well suggesting that in next 3 months, 6 months and 12 months, crude is something, or the energy pack is something that would give you the best of returns if you have that in your portfolio. What about natural gas, Pritam? Would you take it in your portfolio well?
I'm looking at a $10 kind of a rate by the end of the year, next year. I'm very bullish on natural gas, mind you, because all of us have conveniently sidetracked all the factors, forgetting the fact that Europe is actually struggling and rather gasping with the lack of natural gas. My sense is that natural gas, given the fact that we are now sitting with winters, is going to only intensify the price rise from here, this perspective. To get substitute of natural gas is not going to be easy. Europe had moved to clean energy methods. So your diesel generated power plants are passe today. So today, if you ask me, natural gas is not going to be replaced very easily. And the lack of supply from Russia is going to create a tight supply situation across the globe. Let us not forget, China has been sitting on the fence line with the industrial productions not being so high. And come China production coming back to normalcy, you'll see an increased demand in natural gas. And that's going to further, ignite the requirement for natural gas in the global markets. And that's why I'm very, very bullish for natural gas in the long term.
All right. I hope your throat gets better as we move ahead. All right. Anuj, until now we've been talking about everything that you should buy in your portfolio. Is there something that you want to sell and move on in your portfolio?
Manisha ji, I think this year we have seen a huge momentum in commodity market. If we check particular energy prices, earlier a few months back, natural gas was were trading around $10, and right now it's trading around $5. So already we have seen a huge momentum. So if we talk about the natural gas prices, or even if we talk about any commodity prices, which are now on a very promising level, where we are not recommending to sell, because in international market, we are saying that domestic market in gold, we are seeing it's trading around 51,000, but in international market it's trading around $16-18. So that is not a level to sell. But definitely, I think prices are on a very lower side, and where we have seen a huge demand. So right now, I am not saying any sell call in the portfolio, because market yes. So I am very optimistic for commodities for the next year. So I'm not giving any sell call in this commodity segment.
Okay. So even as you are buying, Mr. Ramaswamy, I mean, I see your faces because you all are very long in commodities.
I would like to add a point here. It's all depending on the major trigger of what's going to happen on China front and Russia.
Right.
So these are very, very uncertain for us to actually predict beyond a 6 months horizon. So these two factors are going to really play.
Oh yes, Russia-Ukraine war and China as a factor are going to be very important. So Mr. Ramaswamy, if you were going to make a portfolio which only consisted of commodities, how would you put your allocations on? How much of weightage would you give to energy, industrial metals, precious metals and agriculture in that sense?
I would go in for around 25% towards the bullion pack, silver and gold put together. And a 25% for a short-term 3 months horizon, I would go long, preferably in crude, and copper the rest of around 25%, and remain 25% liquid or cash.
Okay, let's talk about agriculture commodities then, because they have made a lot of money in this year as well. We've seen all-time highs in cotton. We've seen palm do everything that it hasn't done ever in its life. Ajay, how are you looking at agriculture commodities? And I know a long-term view is slightly difficult here, but for the next 3 or 6 months, which ones would you bet on?
Yeah, definitely for next 6 months, I think the spices will definitely go further here. Still, from last Diwali till now, we have seen dhania prices has went up to around 40% gain already been seen. Jeera prices went around 55%. But still, we are expecting the gist is been still there in spice market, because already we know our carryover stock is slightly poor. Production last year was slightly little bit lower. Export demands are picking up because of rupee weakness. Pipelines are totally empty. Post-COVID and post-war, demand has been improving. So I am very much bullish for Jeera and Dhania. Also, this year sowing will be most important, because particularly for Jeera, we have too many competitions, like in the case of wheat, mustard, soft or isab are been very competitive pricing right now. So overall, I think for next 6 months in agri market, I think opportunity would be in Jeera and Dhania, where Jeera can easily test around 30,000 before new crop arrives. That means in the month of Feb. Similar kind of fundamentals have been seen in Dhania, where we can see easily 17,000 to be tested by Feb mid.
All right. I have one quick last question, and this one is to you, Anuj. We do understand that there's a lot of buying opportunities, including commodities within your portfolio. But do you think when it comes to agriculture commodities or many of the other commodities as well, do people actually include them in their portfolio, or is it only the stakeholders which end up buying them or including them in their trade?
I think Manisha ji, agri commodities are a very strong commodity to take in the portfolio because it's if we talk about the equity market, there is a 95% of stock which are totally depend on the agriculture segment. So I think if you are not trading in equity market, you should trade in the agriculture commodity because this provide a momentum to the equity stocks. So I think you are asking me the selling call. So I am giving a sell call in the agriculture commodity because in this year we have seen a huge momentum in edible oil. So I am a little bit hawkish in edible oil segment. I am expecting that soybean and refined soya and or crude palm oil may go down this year or next couple of months. So I am a little bit pessimistic on the edible oil side segment.
So finally, some sell call actually coming in, whether it's in case of edible oil itself, while we have seen prices come off by 35 to 45% in that sector, but there could be some more decline coming in. That, of course, is because of the high availability that we've seen in that sector. Gentlemen, thank you so much for joining us today and making that perfect portfolio when it comes to commodities as a market. And with that, it's a wrap on this edition of Commodity Champions. Thank you so much for watching.